Welcome to Trading Nation. I'm Mike Santoli. Facebook shares slightly higher on Tuesday ahead of its earnings report, but the stock still firmly in a deep downtrend, off more than 30% from its 52-week high. So what should investors expect heading into those earnings? Gina Sanchez is with Trentico Global, Matt Maley with Miller Tabak to talk about that. Gina, has this kind of descended down into any kind of fundamental value zone that you might see?
Well, I think there are a lot of analysts that would say so. In fact, I think all eyeballs really are going to be on user growth. But the reality is that, Facebook has been through the ringer. So you could argue that the pig is through the python and that you could see some value here. But I think the bigger concern is going to be, what happens after midterms around these issues around privacy. So I'll put a big caveat on the value that Facebook has after being beaten down, which is that, Tim Cook, for example, from Apple, is calling for stronger privacy laws. That would actually really hurt Facebook's total business model. So I think the question that investors have to ask themselves is the business model still a viable business model? User growth is really at the margin right now.
Yeah, Matt, I mean, there's no doubt there's a tremendous amount of noise around the stock about privacy, regulation, political static and things like that. But what does the chart tell you in terms of where we are in terms of the supply and demand for the actual shares?
Well, Mike, you look at this stock, and all these FANG stocks back in the spring, whether it be FANGs or some of the other high flyers like NVIDIA, were very, very overowned. I mean, whether it be mutual funds, hedge funds, individual traders, momentum traders, all of them were overowned, all of these stocks. Facebook was the first one to get clobbered. That was obviously back in July. I kind of turned negative. I wish I'd done it beforehand, but after it reported, and the stocks fall down a lot more. But the thing is, during that time in August, when all of these weak hands started to sell the stock, the momentum players dumped the stock, the mutual fund guys went from overweight position to equal weight or even underweight, hedge funds dumped the stock, and that's kind of what we're seeing in these other high-flying tech stocks right now. They're now going through that stage where Facebook's already been through it, and that's why the stock is, even though it's down another 13%, it's actually outperformed over the last 4 or 5 weeks. So my point is that in the next move, I do expect a year-end rally after the election. So this stock could be one of those, because it's fully washed out, more so than some of the other names, could see a nice bounce into the end of the year. But for the reasons that Gina cites, it could be a tough one for 2019. So it's more of a trading vehicle than anything else. And just one thing on the chart, the thing that will give me a lot more confidence is if the stock can bounce back here and get above $150. That was its old support level. That's for the lows back in early February. It was also the breakout level in 2017. So if it can regain that 150 level, you'll start to get a little bit more momentum money back into the stock and could bode well. Again, only for a kind of an intermediate term rally over the next couple months.
All right. Well, we'll see if earnings are any kind of a catalyst for a move like that. Matt and Gina, thank you very much for joining us today. And thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.